Morgan, check out shares of Ford, the company beating in the third quarter 34 cents a share versus the estimate of 26 cents a share. Revenue coming in just a smidge light of expectations at $33.93 billion. That's automotive revenue, we should point out. Free cash flow of $207 million as they continue to do better when it comes to free cash flow. That's an improvement there. But it's in terms of the company's guidance that's going to get a fair amount of attention. Specifically, when you look at that guidance, they've brought down their full year guidance. It was between 120 and $1.32 a share for the full year, or $1.35. Now they're bringing it down to $1.32. The consensus is at $1.26. And their full year earnings, they were previously saying, look, we expect to make between $7 and $7.5 billion. Now they're saying they expect to make between $6.5 and $7 billion. Guys, we've talked about this before. North America is where they're making all of their money. The headwinds that they're facing right now, in addition to this turnaround, higher warranty costs, higher than expected incentives in North America, and lower sales in China. Guys, back to you.
Phil LeBeau, thank you. Steve, I mean, Ford's been a company that's been kind of struggling with some of its own specific company woes, including expanding and moving in China. I wonder if you see these numbers as a read-through to the broader industry right now, or are these more company-specific?
I think there are a lot of headwinds facing the industry. GM is arguably a better-run company, but yet they've got the same headwinds. And to me, this is a lesson in buying a company because of the yield, because of dividends. You got roughly a 7% yield, bang, there goes more than half of it. So that's a poor reason to own a stock in and of itself. I'm not an owner of the autos. I wouldn't own them going forward. There are other places I'd rather put my dough.
Stephen, to your point on Microsoft, it's hard to get above that 140 level. This is a pretty decent set of numbers, and it's just trading around the flat line after
I don't know what anybody's trading on here. It's all about the guidance. Yeah, the number was great, so the stock should be up marginally. It was a good beat. The bar is so high for a beat, though, that you got to really beat. I mean, it's not just a beat. I mean, you got to take that sledgehammer, hit investors over the head with it.